Hey, for all you Tesla fans out there, here's an intriguing question for you. With Tesla trading around $180 a share today, can you buy it for $50 a share? That's the big question that I'm going to answer today in this video. So let's just jump right in. Hey everyone, I'm Lee Lowell, founder of smartoptionseller.com, a website dedicated to helping you up your options trading game, specifically from the option selling side of things. So I get a lot of questions about, how to trade certain stocks, how to trade certain options. But in today's video, I'm going to show you how you could potentially buy Tesla for $50 a share while it's currently trading at 180. And the best thing about it is that you're going to get paid cash for putting in an offer to buy Tesla at $50. How does that sound? All right, let's talk about this. So we're going to be talking about our bread and butter options trading strategy, which is selling put options. And for those of you that know about selling put options, you know it's a great strategy. In a nutshell, when you sell a put option, what you're doing is obligating yourself today for some time in the future to buy a stock of your choosing at a price of your choosing. So for all of you fans of Tesla that want to buy shares of Tesla, but not at today's price at 180, you want to buy Tesla at a really, really cheap price, or you want to try to buy it for a really cheap price. I'm talking ridiculous cheap prices. So in this video, I'm going to show you how you could potentially put in an offer to buy Tesla for $50 and get paid cash to do it. And it's by selling a put option. It's ridiculous. So let's talk about this. I want to bring up a cheat sheet here of what we do at the Smart Option Seller. Let me move myself over here a little bit. So the Smart Option Seller Guide to Selling Put Options. We're going to run through this list pretty quickly, and I'm going to show you the example of how much money you can get paid by selling Tesla put options and obligating yourself to buy it for $50 a share. That's $130 cheaper than where it trades today. Stick around, watch this video. It's a great thing. So we're talking about selling put options. And we're going to run through this list real quick. So when you sell a put option, what's your goals here? So we have a 5-step process here. Number one, you have to pick a stock that you want to buy at a cheaper price. And you're going to sell the corresponding strike price, which is the price where you want to buy the stock. So you sell the strike price, you sell that put option at the strike price that matches your desired buy level. Tesla's at 180, you want to buy it at $50, you're going to sell the $50 strike price for Tesla. You're also going to pick an expiration date because all options have an expiration date. So you're going to choose the expiration date. I'm going to show you how you can go through different expiration dates and choose the best one for you. When you've done that, now you're just going to sell the put option and collect the cash. Yes, you're going to get paid to buy Tesla or whatever stock you're looking at for a much cheaper price than where it currently trades. It is crazy good how you can make these kinds of trades. And then you just wait until the option expiration to see if you get what's called assigned. That means whether you get to buy the shares or not. Okay. Now, number 6 is another step, a caveat that when you trade options contracts, you can buy and sell those at will at any time you want. You're not required to hold the trade until expiration. So if you sell a put option contract and you don't want to be involved in the trade anymore for whatever reason, you can close out that trade and buy that put option back, that option contract back for whatever its going price is at that time. So all option contracts have a price, okay? And you can buy and sell them at any time you want. And we're talking about selling options as your initial transaction. So you sell it, and then later on you can buy it back for whatever price. But that's not what we're talking about today. The other aspect of selling put options is that what you're doing is when you sell a put option, like I said, you're obligating yourself to potentially buy a stock sometime in the future at a price that you've predetermined. So you just have to wait around to see if you get to buy the stock that you want. Okay, so we're going to look at an example of selling a put option on Tesla for the $50 strike price. Now, before we go through this, I'm going to show you here. I want everyone to download or get our free put option selling guide. Here's how you do that. Go to our website, smartoptionseller.com, and that is not the put selling guide. I'm going to show you that probability calculator in a second. Free put selling basics ebook. It's all about how to sell put options. Go to our website, smartoptionseller.com, click on the put selling basics link right here, scroll down, and put in your name and email address right here. We will send you an email that contains a link to get the free copy. So do yourself a favor, get this, read it, learn about it, and let's move on to our talk about how to sell put options on Tesla. So here's what we're talking about. We're looking at the January 2024, 1 year from now, $50 put option contract that you can sell for $1.20 per contract right now. Now, how do we find those numbers? Let's go to our option chain within Interactive Brokers. This is an option chain for those of you that are not familiar. When you want to buy or sell options, you got to look at an option chain, which lists all the expiration dates here and all the option prices. These are put options on the right. These are call options on the left. All we care about is the strike price column and the bid-ask column. Now, we're talking about how to potentially buy stock at ridiculously cheap prices sometime in the future. Now, here's the option chain for Tesla. Last price, $179 a share. If we go back to the chart here, Tesla's at $180 a share. We're talking about potentially buying Tesla for $50 a share. Okay, $50 a share is all the way down here. Here's Tesla at $180. $50 is all the way down here. In no man's land, okay? So 180 to 50. You want to buy Tesla for $130 cheaper than where it currently trades. That's about a 72% drop in the price of Tesla sometime in the future. And you're willing to step up and buy shares of Tesla for $50 a share. How many of you out there, the way Tesla's been trading, would you be super excited to buy Tesla for $50 a share and get paid money to do it? It's crazy. All right, so let's go back to our option chain. So when you pull up an option chain, you have all these expiration dates that you can choose from. You click on the More tab, you can choose even more expiration dates. So what we're going to do is we're going to focus on the January 2024 expiration date, January 19, 2024, 307 days from now. And we're going to look at what certain options contracts are paying, how much money you can get by selling this Tesla 50 strike put option. So here's the strike prices here. $180 coincides most closely with the current price of Tesla at $180, $179. But what we're going to do is we're going to go way down the option chain here to get to $50. And we're going to see how much money we can get paid for that. So here's the 50 strike right here, letting the option prices populate here. Now, even ridiculous more, you can see that the strike prices for Tesla go all the way down to $1.67 per share. So think about this. When someone buys a put option, what they're doing is they're speculating that the price of the stock is going to drop. So by January 2024, someone actually thinks that Tesla could fall down to $15 a share, $10 a share. They're willing to pay you money for that. They think Tesla's going to fall all the way down to $10 a share. They're going to buy a $10 strike put option, and it's paying 2 or 3 cents per contract. That's $2 or $3 in actual cash. It's ridiculous. I mean, and what you can do, you can contract yourself to buy Tesla at $10 and collect $2 a contract. You know, it's not a lot of money, but it's still crazy that someone's willing to do that. So let's go to the 50 strike right here. 50 strikes. So when if you want to potentially buy Tesla for $50 a share, instead of just putting in a limit buy order in your trading platform to say, hey, just buy me Tesla at $50 if and whenever it drops to 50. There's no guarantee it'll ever happen. But by selling a put option contract instead, yes, you're putting in that same limit order to buy Tesla when it falls to 50, but in the meantime, you're going to get paid cash to do it. You might as well let someone pay you some money. How much money are you going to get? Right here, $1.18 bid at $1.24 offer. That's how it went out yesterday, Friday, St. Patrick's Day, March 17th. So somewhere right in the middle is about $1.20 per contract. Okay, so every option contract consists of 100 shares of stock. So you have to multiply what you see here by 100. So if we sell it for $1.20 a contract, that means you're going to get instantly $120 put into your account just for selling that put option contract and obligating yourself to buy Tesla for $50 a share. So you're doing two things. Number one, you're obligating yourself to potentially buy Tesla in the future for $50 a share. And number two, you're going to get $120 just for making the transaction. So let's go back to our our cheat sheet here and talk about the actual trade. Now, this is an example only. This is not a real live recommendation. I'm just showing you what you can do. So please don't take this as a real example, even though you can do this if you are so inclined to do so. So the example is sell the Tesla. You're going to sell, not buy. You're going to sell the Tesla January 2024, $50 put option for $1.20 per contract. So for every contract that you sell, you will receive $120 free and clear to do whatever you want with that money. Now, if you sell 10 contracts, you will receive $1,200. But you have to remember, each option contract consists of 100 shares of stock. If you sell 10 contracts, you're on the hook to potentially buy 1,000 shares of Tesla. If you sell one contract, you're on the hook to buy 100 shares. Okay? Now, if you end up having to buy those shares at $50 a share, which you would be really happy to do, you have to pay for the shares in full at that time in January 24. That's a $5,000 outlay. If you buy 1,000 shares, that's a $50,000 outlay. So you have to think about how much you're willing to potentially buy. And I always say potentially because the only way that you will be required and obligated to buy the shares of Tesla at $50 is if Tesla actually falls all the way down to $50 by January 2024. Okay, so you're going to be doing some waiting. You're going to wait from now until next January, 10 months from now, to see if Tesla falls from 180 all the way down to 50. If it does, you get to buy the shares and you pay your $5,000 for your 100 shares. If Tesla doesn't fall that far, then you're just going to keep the $120 that you get and you don't get to buy the shares. And that's okay with you because you've been compensated by the put option buyer. They're giving you $120, okay? So in order to do these types of trades, you have to have a brokerage account, a stock and option trading account, and you can use a margin trading account if you want. If you're going to use margin, here's what happens. If you sell these put options, your broker needs to know that you have some skin in the game, that you will be able to buy these shares if it comes to fruition in next January. And if you sell one contract, your broker needs to know that you're going to have $5,000 at that time to buy your 100 shares. But until that happens, you're in a margin account, your broker will not require you to keep the full $5,000 on hand. They're going to offer you what's called the margin requirement, and that's just a fraction of the $5,000. So how much of a fraction? Well, in the US, it's roughly 10 to 20%. Most brokers in the US are going to ask you to hold aside about 10 to 20% of that $5,000. And that's roughly $500 to $1,000. That's 10 to 20% of the $5,000 is $500 or $1,000 that you'll have to keep on hold out of your free cash in your account while this trade is active. Okay. Now, if it comes to fruition that you don't get to buy the shares, Tesla doesn't fall to 50, what kind of return are you getting on your money? People always want to know, what kind of return can I get by making this trade? Well, number one, just remember, you're always trying to buy the shares. So if you end up buying the shares at 50, now you have your 100 shares at $50, and then Tesla can go up unlimited. You have unlimited profit potential in the future. That's if you buy the shares. If you don't get to buy the shares, you're still getting a decent return on that hold, that margin hold. How much? We call it ROM, return on margin. So if Tesla doesn't fall to 50 and the trade will expire worthless, you're just going to keep the $120 as your profit in the trade. And you divide that $120 into the margin requirement. So if you get 120 divided into 500, that equals a 24% return on margin in the 10 months. If your broker requires you to keep a 20% hold, which is $1,000, then you divide the 120 into $1,000 and you have your 12% return on margin for 10 months. It's still a great trade, okay? It's still a great deal. You have to hold some money aside while the trade is active, but your returns are actually pretty good. Now, if you get to buy the shares at $50, then now you just hold the stock like any other shareholder in Tesla and you wait for the stock to go back up. And that's how it is. So the risk here is that Tesla keeps dropping. That's the risk with any trade you take. If you buy a stock, The biggest risk is that the stock drops in price. Same thing with Tesla. If you buy it at 50, it could keep falling to 40 and 30 and 20, who knows? But you're making the decision today when Tesla's at $180 that you're willing to step up and buy it for 50. That's the line in the sand that you've drawn. And you're going to get paid $120 for every contract that you sell. Now, we can go back to the option chain. Now, $50 is even too expensive for you. You can go down to the $25 strike and contract yourself to buy Tesla at $25, and you can get about, $20, $21 for every contract that you sell. If you think 25 or 50 is too low, you can scroll up. How about $100? You willing to step up and buy Tesla for $100? Well, now you can get about $685. $685 for every one contract you sell. That's not a bad deal. It's still an $80 discount from where Tesla is trading now. Now you can go through the option chains. If you can look at December 2023 and see what the options are paying. The 50 strike is paying December 1 month earlier than the January one we looked at, about $1 a contract, which you would receive $100 for every contract you sell. It's crazy. This is crazy money, okay? Now, I'm not telling you to go out there and sell every put option contract and every stock out there, because that's not what I'm getting at here. What I'm getting at is that if there's a stock out there at its current price that you don't want to pay its current price, you want to contract yourself to buy it at a much cheaper price. You can sell a put option at that level, at that desired buy level, and get paid money to put in your bid on that stock. And all you do is wait to see if the stock comes down. Now, if sometime in the future, there's some bad news that comes out of the stock, and all of a sudden you're like, what, I don't really want to buy this stock anymore. I want to get rid of my obligation to buy the stock. In that case, all you have to do is buy that same put option contract back for whatever its current price is at that time. Now, you may end up incurring a loss if you have to buy that option back for more expensive than what you originally sold it for. So keep that in mind. Or the price of that option might be cheaper, and you can buy it back at a cheaper price and lock in a profit. You're not required to hold it until expiration, as I said. All right. So if we go back to the cheat sheet here. So once again, the 5 steps. Make sure, number 1 rule, pick a stock that you would want to buy. Don't sell put options on stocks you have no interest in. Pick a stock you want to buy at a cheaper price, and then you go through the steps of choosing a strike price and expiration date, and then you sell it. All right. So that's really about it. That is the other thing I wanted to show you is, let's go back to the probability calculator. I almost forgot about this. So you might be wondering, well, what are the chances of Tesla falling that far by next January? And why would someone want to buy a put option and pay that money if there's like no chance of Tesla falling that far? So here's what we have, probability calculator, that tells us what are the chances of a stock falling from point A to point B in X amount of time. Now we have the current price of Tesla here, the expiration date of January 2024 in 307 days, and the volatility is 62%. That's just telling us how erratic Tesla has been moving. And our targets are $50. What is the chance of Tesla falling from 180 all the way down to 50 in the next 307 days? Here and here is what you want to concentrate on. There's only a 1.2% chance that Tesla will fall from 180 to 50 by next January. Conversely, there's almost a 99% chance that Tesla is going to remain above $50. So if you sell this Tesla $50 put option, it's almost guaranteed that Tesla is not going to fall that far. So you'll probably just walk away with your $120. And then you know what? Now you can sell another put option for another 10 months down the road and collect another round of cash while you put in another obligation to buy Tesla at a really cheap price. That's how you do it. That's how we do it at thesmartoptionseller.com. So also, if you want to know a little bit more about what we do at the Smart Option Seller, our services tab right here. We have 2 newsletters, put option selling and selling put option credit spreads. We have our one-on-one coaching sessions if you need help getting to that next level in your option trading game. Don't forget to get the free Put Selling Basics guide right there. All right, that's it. I hope this video has been helpful. I hope it opens your eyes to how you can potentially buy a stock of your choice at a really cheap price and get paid to do it. It's how put selling works. All right. Give me a thumbs up. Leave me a comment. Send me an email. I always answer your emails. Let's get this video going viral. I'm trying to get everyone in the world to understand how great put selling is. Let's make it happen. All right. Thank you everyone for watching. I hope you have a great weekend and a great trading week ahead. This is Lee Lowell signing off.